Good morning and very warm welcome to everybody present on the call. Along with me, I have Mr. P. Srinivasan, our CFO, and SGA, our Investor Relation Advisor. We hope that you and your families are safe, healthy, and secure. Hope you all have received our investor presentation by now. For those who have not, you can view them on stock exchange and company website. This COVID pandemic has not only impacted us today, but it looks like we have to learn to live with it in future also. Apart from healthcare, which was a major concern, the economies across the globe were impacted. The lockdown imposed by countries across the globe as well as by India from end of March was meant to protect human lives, but significantly affected the livelihood of many. Business operations of all essential services were adversely impacted, with us being no exception. Lockdown imposed by government due to COVID-19 completely wiped out manufacturing activities for the month of April and early May 2020. The manufacturing started from mid-May and picked up thereafter. The impact of the same is visible in our Q1 results, where due to restriction, our ability to service got severely constrained. Further, the suboptimal level of operations at the customers till end June did impact our manufacturing activity. The net result of these factors obviously led to drop in sales by about 50% compared to the last quarter. Fortunately, we did not experience any adverse impact on our sales realization for the quarter. All of you are aware that in case of lower operating activities, leads to lower absorption of fixed costs, which happened in our case as well. As volume picks up, we are confident to improve the absolute EBITDA of the company in the coming months and quarters. Despite such an adverse environment, we are continuously working on the strategy of maintaining volumes, market shares from our customers, and exploring the option of seeking additional volumes wherever possible. Our production level has started ramping up month-on-month basis, and pace of degrowth has slowed down to a large extent. From July onwards, we are running at a higher level. Our sales in July have been much better than June, and the first 3 weeks of August, as of today, gives us confidence that the momentum picked up from end June is still sustaining. With the given outlook, we do believe that if these indicators sustain, the sales volume level of pre-COVID level are quite achievable. This, of course, does come with a rider, being any interruption happening at our end or customer end or vendor's end due to COVID will definitely impact the operations parameters. As government relaxes the lockdown phase and more sectors of the economy starts getting into action, the replacement tire business is expected to pick up, and this obviously forms 70% of the tire business. OEM volumes are still reeling from the impact of COVID, resulting in sluggish vehicle manufacturing, although the month activities are an increasing trend from data released by SIAM. As stated in the previous phone call, the restriction on tire imports has led to many tire majors ramping up their utilization, giving an indication of pickup in volumes in the coming months. We have resumed operations at all our manufacturing facilities and are making concentrated efforts toward ensuring we are ready as the demand picks up. Export segment continues to grow, and our efforts in this segment is to widen our spread across different customers with a global presence. Just to reiterate what we shared in our earlier phone call, even during this time, some reputed international customers have approached NOCIL and have started discussion with us to be their global supplier across all continents. This is a huge opportunity for the company. By virtue of our long association with most international tire majors, the company also enjoys a preferred supplier status with their Indian operations. With increasing presence of these players in Indian market, NOCIL stands to gain significant leverage as a domestic supplier to these plants as well. With expanded capacity, the company is well prepared for meeting the increasing requirements. I think this is the brief from my side. Now I would like to hand over to Mr. C. Srinivasan to give you update on financial performance. Over to Mr. Srinivasan.
Thank you, Mr. Dev, and good morning, everyone. Hope you all are doing good. Just to reiterate or run through the brief financials of the quarter ended June 20. To start with the performance of Q1FY21, obviously is not an indicator of a normal quarter or operations, and therefore is not strictly comparable with any other previous periods. As already informed by Mr. Dev, the revenue for the quarter got impacted by COVID, lockdown and other things. Therefore, the revenue from operations stood at 107 crores, maybe around 50% of normal level. As our manufacturing facilities were shut for the month of April and up till early May 2020. With ease in lockdown restrictions, our manufacturing operations resumed from 8 May in a phased manner with strict safety and hygiene protocols. As Mr. Dev said, on a month-to-month basis, the production levels are increasing and it is continuing now. The value addition for the quarter ended June is at 55 crores, which is about 48.6% of sales. This was an abnormal quarter where we had legacy cost of inputs booked during pre-COVID times, temporarily impacting our value addition. On the operating EBITDA, it was subdued due to the under absorption of fixed cost on the back of suboptimal operating levels. Therefore, EBITDA stood at 7 crores with a margin of 7.4%. We are confident to improve our EBITDA margins as sales starts picking up, volumes start picking up, which are already getting reflected in July numbers as well as the first 3 weeks of August performance. PBT for the quarter as a result is at 9 crores, which includes an income tax interest refund of 9.5 crores. That also fortunately helped us to show a profit before tax. The profit after tax is at 12 crores with margin of 11%. The tax, we got a credit due to the previous year's income tax refunds. So those orders came in June and therefore we could recognize that. Just to reiterate, the company continues to be debt free and has sufficient liquidity to take care of its working capital requirements. With this, I would like to open the floor for question and answer.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Nav Bharadwaj from Anand Rathi. Please go ahead.
Thank you for taking my question, sir. My first question would be on the employee cost. Like in this quarter, we've at 16.5, and this is somewhat back to our Q3 19 levels. So, if you could shed some light as to how do we manage this? Is there a contractual labor involved, or how does this move, and how should we expect this going forward, assuming that our revenues are going to improve from here?
Basically, whenever an operations are subdued and in the way COVID started, the pandemic started, most managements some managements prefer to go for an employee pay cut, job losses and other things. As a company, we decided not to offer increments this year, and to that extent there is a effect on the incremental on the payroll staff cost as well as the referral funds. Basically what happens is when your increment is sanctioned, the referral funds also gets added into the employee cost. So because of these two factors, we could probably save some costs for the quarter.
All right, sir. And in terms of the other expenses, sir, what would be a workable number, a normalized workable number?
Now, I think if you are looking at the conversion cost, basically other expenses are 28.5 crores as against 50 odd crores.
Right.
Basically, during this period, almost for 1.5 months, there was no activity. So therefore, there were expenses like plant maintenance, spares. There could be some contractors' service-oriented jobs which were not there. Therefore, we could save it. But I think if you are running the operations at a full-scale basis, I think those costs will come back to normalcy. Maybe some changes here and there will be there. We will definitely look into that. But I think one should not take 28 crores as a reference point in the future.
Right, sir. About regarding the volumes, as in we are almost a few months into the next quarter, as in but could you give us an indication as to of the old capacity, what kind of utilization levels are we at, and the new capacities that we have? If not right now, how do we see it shaping during the current financial year for the new capacities?
Now, Mr. Dev very categorically stated to start with, the volume is on an improving trend, increasing trend, which is very good. But we also give a rider because it's not right on our part to say that we have achieved this volume and we are in the right zone. No, let's not. Let's watch the progress in the next 2-3 months, because more importantly, we have to see how far this is sustainable, how the suppliers are functioning, how the customers are functioning, and how we are functioning. So the COVID impact fortunately, if there is no COVID impact on the business operation, the volume is definitely going to improve. And Mr. Dev gave a very specific indicator that if everything goes well, we are our achieving pre-COVID levels is a distinct. I mean, it is a virtual reality which can come in. But let's keep our fingers crossed. But at this moment, it is not appropriate to talk about volume numbers.
Point taken, sir. Last point would be, sir, on depreciation, that this is we've accounted for everything, right? I mean, this is a workable number for sure.
No, depreciation you have 150 crores capital WIP, which is for that depreciation is likely to come in, which will have a 2 crore impact per quarter or 2.5 crores. So the workable number post capitalization of 450 crores, we are looking at 45 crores or 46 crores per annum.
And any indicative time frame by when will we start that?
That I think we have already mentioned in the previous call, by October 20.
October 20. Maintain the same guidance. All right, sir. Thank you so much. All the best going ahead.
Thank you. Welcome.
Thank you. The next question is from the line of Pawan Kumar from Ratnatraya Capital. Please go ahead.
Sir, can you give us an indication of what would be aniline cost as a part of our raw material, and how are we planning to cope with the challenges that they are there in sourcing in the present context?
We have always mentioned aniline, acetone, MIBK, and nitrobenzene constitute about 65% of raw material cost. That's number one. Aniline is available from India, Europe, China, and it is universally available. So it's not that one needs to worry about. And we have been sourcing from other markets as well.
Okay. But any rough estimate, maybe it is 10%, 20% to aniline as the entire raw material cost?
That is not appropriate at this stage to share it. We have already shared the major details, 65% of the 4 major chemicals. I think let's keep at that.
Okay. And this quarter's volumes, from what I understood, are 50% of the volumes of Q4, right?
Yeah.
Okay. Fine, sir. I'll get back to that.
Thank you. The next question is from the line of Rohit Nagraj from Sunidhi Securities. Please go ahead.
Thanks for the opportunity. So first question is in terms of imports of rubber chemicals from China and the current inventories in the domestic market. So what is your view on the same?
Mr. Dev would like to answer that.
See, basically, Rohit, it's very difficult to gauge what's happening in this, because if you really see the overall mood I think on one side the government is propagating the self-reliance. There is also a China plus one strategy which a lot of people internationally are planning. Both these things are positive signs for NOCIL, but these are only indicators. When these indicators get converted into a business, okay, has to be seen. And between the indicators and the actual business realizations, there are a lot of constraints and unforeseen situations, like what happens to COVID, okay, what happens to the overall economy. So overall it looks positive, but that positive indication should get converted into business, and I think it's very difficult to guess.
Okay, that's fine. So the other part is last con call we had indicated about the restricted tire imports. So what is your sense since then in terms of the domestic market? So have there been any increase in inquiries from our existing customers, and what is the sense you are gauging from that?
I think Mr. Dev answered it in his speech. The operating levels have been on an increasing trend right from mid-June onwards, and it is still continuing and sustaining. So that answers the operating rates of the tire manufacturing industry in India has increased. That's the answer.
Okay, and one just last clarification. Last time we had indicated that there is developed one new accelerator, which is an import substitute, and it was sampled to the customers, and we are expecting some commercial quantity soon. So any update on the same?
Yeah, it's already on. It's significantly, it's improved. I must say the operating of that particular accelerator is on an increasing trend.
All right. Thank you so much, and best of luck, sir.
Thank you. The next question is from the line of Nirav Jomodia from Annual Research. Please go ahead.
Good morning, sir.
Good morning.
Sir, my question pertains to the specialty sales for our company. So, what proportion of our sales last year would be considered as a specialty sale? Because you have mentioned sometimes earlier in a call that we are also selling some of our products or categorized as a specialty chemical. So if you can just share your perspective on that side of the business and how it has grown over last 5 years. So let's say if you consider a base of 2015. So on a base of 2015, how it has grown, both in terms of sales, operating profit. If you can just throw some light on the same, it would be very helpful.
Nirav, just to clarify, we are selling conventional rubber chemicals as well as chemicals meant for specialized applications.
Correct.
Now, in the rubber chemical industry, these constitute about 10% of the overall demand.
Okay.
In case of NOCIL basket, this constitutes about 25%.
25%.
25%.
Okay.
Number one. The advantage in this, it's not a high value or a high margin sort of thing. It is a relatively specialized technical application where not many competitors or not many players are there. So the competition is relatively minimal. So therefore, you are virtually getting into a sort of a cost scenario sort of thing. That's
okay. Okay.
Second aspect here is that in the last 5 years, this was largely sold in the export market. In the last 5 or 6 years before, this was probably considering 30% of export sales. Today, it is considering 65% of export sales.
Okay. Okay.
Okay.
If you can just explain more in terms of how has been the margin profile over these 5 years. So, is this business a more stable business in terms of generating the EBITDA percentage margins, or there is also a volatility in this side of the business in terms of the margins moving up and higher? So, if you can just explain on that.
I think the margin profile on the whole has been, if you look at the average margin profile, I think more or less we'll be meeting that criteria. Maybe plus or minus 10% of the margin, that's not a problem.
Okay.
But otherwise, everything is okay.
Okay. And sir, last question would be, so on that side of the business, are we almost running at the optimum level of capacities, and in this new expansion, we have factored in capacity expansion for that side of the business also. You can. Yeah.
Yes, repeat your question, please.
Sir, I'm trying to say whether that part of the business, that is specialty chemicals, so are we operating at almost optimum level currently from the old capacity which we were having, so before this expansion?
Yeah, definitely.
Okay, and in the expansion also we have taken care of this side of the business also. In the expansion also.
We are. I think the previous question was asked about the new product. There also we have started operating at a decent level. I'm not saying optimum level, but decent level.
Okay. Thanks a lot, sir, and all the best.
Thank you.
Thank you. Next question is from the line of Kaushal Shah from Dhanki Securities. Please go ahead.
Yeah, thank you very much, sir, for the opportunity. Sir, some thoughts on the opportunity for us in US, where we have kind of done some work, and we are also trying to export a significant number.
US is a large market. It's in the world's number 2 market in the hierarchy of rubber chemicals consumption. We are targeting in that market definitely. With the China trade sanctions coming in against Chinese exports, we have got an opportunity, and we have started doing that business from 2019 onwards. And so far the trend has been good. Basically, I think in the earlier calls we have been discussing, or we have been communicating, that to establish volume, it's a long-drawn game, because you have to establish your credentials in terms of delivery, quality, and your pricing approach. It's a combination of 2, 3 or 4 factors before the consolidation of volume happens. So we are going through the evaluation process, and we are pretty confident that it will pick up in the coming years.
Sure. And sir, there was an earlier question also on this. So in terms of this prevailing kind of anti-China sentiment both in India as well as in the US, we've also, I think, a few months back made an appeal for the ADD to be kind of resumed. So any thoughts on that, sir? Meaning, does it open up any possibilities for us?
I think that we have already answered in the earlier call, as well as the annual report which has been circulated. Basically, what we have stated here there is that we made an application for a product, one of the main antioxidant, for anti-dumping petition. The government first examines the application whether there is a prima facie injury, and once they are convinced there is a prima facie injury suffered to NOCIL, they have initiated the case. Now the investigation process will go on as per the DGTR rules, and hopefully I would say 1 year's time, maximum 12 months time, the notification should come favorably. That's what we are hoping for. Let's keep our fingers crossed. But yes, we have taken action to initiate anti-dumping, and we felt it was injuring our performance and by excessive dumping by China and other competitors.
Thank you.
Thank you. The next question is from the line of Shivan Sarvaiya from GHP Securities. Please go ahead.
Good morning, sir. So a couple of questions. One is on the value addition. So you said that there has been certain legacy costs which have resulted in the temporary reduction. So if you could just give if you just quantify the same and give some color there. And so qualitatively, so what would be the levers that the company is targeting to go back to the 52-odd% margins that we used to do? So the second question is on slide number 19. So you have shown the reduction in the global rubber consumption, and the reduction is extremely huge, where it goes back to 2013. It goes below 2013 levels. So, sir, how do we look at our capacities getting filled in this environment, and how do we achieve growth, and by when?
I will answer in two few stages. One is on the value addition part. What we have lost, we have been giving a guidance of 50%, and I believe this quarter we are at 48.8 or 48.6. So effectively we have lost 1.3 crores or thereabout. So it's not a significant amount, though for the quarter looks significant, but in terms of overall thing, it's not a significant over the overall raw material cost. So basically, we have booked certain raw materials in January, February, and those consumptions took place in April, May, June, when the current crude price fall and thereafter it happened. So that's the explanation for value addition. And our belief is that if we operate at reasonably good capacity level, we are confident of maintaining at 50%. Unless we decide to go aggressively for volume increase or a price increase or price reduction, etc. As far as the rubber consumption is concerned, this is more, I think the slide 19 very specifically states that this is a January-March annualized data. This is the January-March IRSC data which has been released. From that, it has been annualized, and there we find there is a 13% drop in consumption, largely in China, which was 26%. So we believe this year, yes, there will be some reduction in the negative growth, but typically in the last call we have mentioned that general historical trend is whenever this sort of debacle happens, the next year is a robust once the things settle down. I think you may have to visit 2008, 9, and 10 during the Lehman Brothers crisis, how it happened. Maybe that will give you an idea how the business is likely to bounce back.
Okay, sir. And one last question, sir. In terms of any, have you heard of any additional capacities coming in China? Are they going to be coming in? Any latest news on that?
Yeah, we have heard from China Sunshine. They are coming in accelerators. They have indicated something in antioxidants, but we are not aware of when exactly it is going to be commissioned. I think by the end of this year is what we understand. And something on insoluble sulfur. But anyway, we are not in insoluble sulfur.
Okay, sir. That's it from me. I will back to you. Thank you.
Thank you. The next question is from the line of Tarang Agarwal from Old Bridge Capital. Please go ahead.
Good morning, sir. Thank you for your time. Just carrying on from the previous participants' questions, sir. So, what is the maybe perhaps once the pandemic is over and things resume, internally, is there a benchmark that y'all have probably set up in terms of when y'all are planning to reach 100% utilization?
I think that this question has been answered during the last call. We had mentioned originally we had a plan of 3 years, but because of this 1.5 years sluggishness or recessionary conditions, we are still believing 4.5 years we should get it. So by 2024, we are pretty confident to touch 100% capacity utilization.
Sure. Thank you, sir.
You have any more questions?
No, that's it.
Thank you. The next question is from the line of Dhavan Shah from ICICI Securities. Please go ahead.
Yeah, thanks for the opportunity. So I have a question on the incremental capex. So on the slide number 20, you have mentioned that the asset turn would be around 2x of FY18 price. So what is the price level right now versus the FY18? And you also mentioned that the realization are more or less stable now. So how do you see the realization will pan out over the period of time?
Double the current, if you have looked at current prices, I think we are looking at 1.85.
Okay. And is there any scope of improvement? Because you mentioned that the volumes are picking up. So are you seeing some green shoot in terms of the realizations?
Not really, no major change. But what we are seeing is the volume has picked up. The operating level, I must say that for Q2 FY21 will be in absolute terms higher than Q2 FY20. Whether we will touch the pre-COVID level, that's a second issue. But as compared to Q2 FY20, Q2 FY21 will be on a higher level.
Okay. And one last question is on the other income and the other expenditure. So this quarter, we have seen some 7 odd crore increase in the other income. So is there any exceptional over there?
I think that we have already announced during the speech that this is the income tax, old major income tax refunds and interest thereto that has been recognized. So therefore, you are able to see a credit in other income by 7.5 crores, and also you are seeing a credit in taxation provision of 5 crores.
Okay. And in terms of the other expenditure, can you share how much is the variable and fixed cost over there? I mean, the proportion?
I think in this quarter is not a representative one, but generally we are talking about 50-50.
Got it, sir. Okay, that's all from my
The
side.
entire conversion cost, as I'm saying.
Okay. Thank you.
Thank you. The next question is from the line of Aniruddha Naha from PGIM India. Please go ahead.
Yeah, good morning, sir. Just wanted to understand this tie-up that you're talking about with global players. What are the kind of, without naming plans, etc., but what kind of modalities are you talking? Are these long-term contracts? Are pricing fixed? If you could give some idea of how these contracts will shape up in terms of pricing and periodicity.
I think it's a process. Basically, when you are a supplier, you intend to be a supplier to a tire customer, they must evaluate you. Now, I'm just getting into the basics just for understanding clarity.
Sure.
There is an approval process. The approval process gets triggered if you are a new supplier, if you are an existing supplier with a new location, if you are an existing supplier with a new product, and if you are an existing supplier with an existing product with a new technology. Any of these 4 parameters gets touched, then the approval is required. These tire companies come and visit your plant, examine your records, understand the process, and they fix you, they grade you as per their auditing standards of safety, quality, technical competency. There are so many things. Thereafter, we have to send samples, and only after the samples are evaluated, maybe sometimes some companies even manufacture tires out of it, test those tires in different conditions before giving accreditation to them, to NOCIL as their approved vendor. Only then the commercial trial starts, the commercial order starts. Now, typically, these commercial trials are discussed on a quarterly basis. Unless we establish our consistency track record over 3 or 4 quarters, then only the business starts picking up in a bigger way. I hope I've answered your question.
And sir, how long does this process take? I mean, within the thing, would it be, if you can give some time frame of when, if at all it fructifies, how long will it take?
If it is a new product, it may take 18 months. If it is an existing product in the market, maybe 6 months.
Sure. Thank you very much. That's from my side.
Thank you. The next question is from the line of Udit Gajiwala from SMC Global. Please go ahead. Mr. Udit, your line is in talk mode. Kindly go ahead with your question.
Hello.
Yeah.
Yeah, sir. Thank you for taking up my question. The question is related to the anti-dumping duty. So this time we have filed up for one product, if I'm not wrong. And how much that contributes to our top line?
I would say, I think I have already answered in the last time's call. I think this is very sensitive today with the investigation is going on, so I would not like to divulge this.
Okay, sir. Thank you.
Apologies for that.
No, okay, sir. Thank you. Rest questions have been answered. Thank you.
Thank you. The next question is from the line of Anubhav Rawat from NNCL. Please go ahead.
Oh, मेरा कहाँ है?
Hello.
Mr. Anubhav, your line is in talk.
Go ahead
with your question.
आप खा लो उसके बाद आना. आप खा लो. मेरे को भूख नहीं. हाँ. हाँ ठीक है. आप.
Mr. Anubhav.
Hello. Hello. Am I audible?
Yes, sir. You may go ahead.
Yeah. Hi. Good morning, sir. Just wanted to know, sir. There is this chemical called insoluble sulfur. So why don't we manufacture it? Have we ever tried, or do we plan on doing it?
No. Mr. David, answer.
I think this is one product which we have never looked at it, because I think overall there seems to be an oversupply in this product, and we have concentrated more in terms of antioxidant, accelerator, specialty chemicals, and have not looked at it, and we also don't intend to look at it.
Okay. So is it only because of oversupply, or is like the chemistry a bit tricky? I just wanted to understand that.
Basically, I think
when you look at the feasibility, you look at everything, you look at technology, you look at quality, you look at the pricing, you look at the margins. So it's a combination of the oversupply, the next 5 years demand in the business, the replacements, all these things you look at, and then you decide whether the product should be looked at or should not be looked at. So it's not one parameter, it's various parameters which sums up the strategy for a particular product.
Mm-hmm. Fine. Understood. Understood. Thank you. Thanks a lot.
Thank you. The next question is from the line of Ravi Mehta from Deep Financial. Please go ahead. Mr. Ravi Mehta, your line is in talk mode. Kindly go ahead with your question.
Hello.
Yeah.
Just two quick questions, sir. Where do you think...
Mr. Mehta, can you speak closer to the handset, please? Your voice is not audible.
Now is it fine?
Oh, yes, sir.
Just two quick questions. Do you think where do you think you are in the journey of the seeding process from the new plant? So I think that would be at a fairly advanced stage. So are we expecting some decent size orders? Number one. Number two, in terms of gross margins, you already explained that by and large we will make a comeback. So given the entire mix of the accelerators and the specialty chemicals, where do you think will the gross margins reside? I mean, steady state, it will be down from the previous years, but maybe 150 basis points lower than the previous years, but say around 23-24% would be the corresponding EBITDA margins. Would it be fair to say that?
Gentlemen, as far as the EBITDA margins are concerned, I think it's too premature to talk about it because the way the current situation is happening, we are unsure how long, how far the operations will sustain and how long customers are operating, what is the demand of automobile. There are so many challenges. The momentum has picked up, we are not denying it, and that is showing that's a healthy sign. And we are likely to do a performance in Q2 better than last year's Q2, so that's a good sign. As far as the pricing approach is concerned, it all depends on what is the volume you're getting in. So it depends on the offers coming in at that time, at that relevant point of time, and how the competition is working. The major issue here is that the competition continues to experience the prices are a little aggressive. So one of the competitors recently have announced their results, and in their summary they concluded that the market conditions are likely to be challenging for the next 6 months. They also added that the prices seems to have bottomed out. It is supposed to rebound back, but we are waiting for the good time. The question is when and how we will build the gap. The other issue which is happening is on the market front, there are two challenges which the customers are facing. One is the China situation and the non-Chinese situation. So we being a non-Chinese player, we seem to have an opportunity to ramp up our capacity utilization because inquiries are coming, discussions are happening. These all things will take some time before it fructifies into a serious business volumes or operational improvement. So that's what I can say. It's more of qualitative. We cannot be getting into some objective numbers or quantified numbers.
Yeah, appreciate that. But given the mix of now that you have all the 22, 23 kind of rubber chemicals that are possibly available in the market and be present in all the categories, do you think there are certain categories where we could have advantage over competition, or even that's not fairly clear?
I think each player in the market has different philosophy. We have certain Chinese competitors who are more interested in volume, and they operate the plant fully and regardless of what is the price. Whereas we believe to approach the business as a one-stop shop with 22 products to the customer. So we are not discriminating only at customer A or customer B. We want to satisfy and service all customers. So the approach from our side relatively different as compared to a player like maybe a Chinese competitor. So that's the first part. The second part is we still feel that we are likely to get opportunities and we are waiting for the right time.
Yeah, but in some of the categories, do you think we have a distinct advantage or even?
Yeah, definitely. Especially in certain specialty chemicals, we are much ahead. Mind you, one thing, in all these parameters, the important fact which we don't intend highlighting, but I just want to bring it to your attention. These margins are reflecting net of anti-dumping duty. There is no anti-dumping duty there. But you have a Chinese competitor who is enjoying a benefit of serious subsidies and other government protections. So when we are able to compete and match the Chinese price in our selling prices and still making margins, it gives us confidence that our technology, our business approach is quite robust, and we are and with the blend of 22 products, we are able to balance it quite well.
Perfect. And last thing, sir, if I may, I mean, you alluded to 2008, 9, 10 being an historical timeline from which we can possibly draw. Do you think next year we are fairly decently placed to, possibly play out the?
In fact, I think in the coming times, in the coming months, and the coming quarters, it's basically you have the capacity set up. It is just that you have to play the volume game. You need to just encash each opportunity which comes across your way. Maybe it may even tantamount to some aggressive pricing. Fair enough. You have to. So they outlined the conference with the statement that it's important to capture volumes because that is where the plant utilization comes in. Unless the plant utilization happens, then the optimization, other benefits of manufacturing benefits will come in. So therefore, it's important to ramp up the capacity. That's our focus, and we would continue to adopt that approach to increase our capacity quarter after quarter is what our goal is.
Yeah, so my question was more from the point of view that, you had alluded in one of our meetings that, the foreign suppliers, particularly the US guys, want a decent supplier number 2, and that should be non-Chinese. So given that fact and given that background, I think the tailwind is significantly in our favor in this kind of scenario. So from that point of view, you see reasonably solid volume growth at least next year, if not this.
Yeah, next year and next 2 years, I'm expecting a reasonably volume growth.
Great, sir. Great. Many thanks for answering these.
Thank you. The next question is from the line of Aditya Ketan from East India Securities. Please go ahead.
Thank you for the opportunity, sir. So my question is on the free cash flows. So for the next 2 to 3 years, a good amount of free cash flow would be generated. So how are you planning to utilize the same since we have no major capex planned as of now?
See, basically, you are aware that we will be finishing our capex plan maybe by Q3 of this financial year. Okay, because if you really see 150 crores still continues to be in capital work in progress. Now, having completed the plan, as we have been saying, the emphasis will be on increasing the volumes in the market. Obviously, as an organization, we are never static. We continue to evaluate various avenues. Okay, but it's too premature to talk about anything at this point of time. But as only one thing which I can say that yes, we continue to evaluate the opportunities which are available in the market, and when we have a right opportunity and the right plan, we would like to share it with you.
Okay, sir. Okay. And sir, on the exports outlook, so some of the export geographies like Japan has witnessed severe impact of the COVID-19. So so what is your export outlook considering we have witnessed good growth in exports over the last year?
I think the export outlook, yes, I agree that the countries like Japan are severely affected. But one thing I can say that our export volumes are more or less same or they are increasing. Okay. Now, the tire industries which are existing in Japan, they have worldwide operations and they always would give a business at some other location. So we are very confident that our export volumes will definitely continue to grow. The rate of growth would depend on the pandemic, the specific countries, but we are confident that we will have that share in the export market.
Okay, so we had given a guidance earlier of reaching 40% by FY22 or FY23. So does that guidance sustain?
There, actually, we would like to clarify. We said export will constitute 40% of the revenue basket at peak levels. And if we are going to achieve peak level in 23 or 24, more particularly, we will be touching 40%. Rather, I would like to add, we were prepared for 40% export basket and 60% domestic market. But if situation changes, domestic market increases, we will not mind it.
Okay, sir. And just a last question from my side. So would it be possible to share the US volumes for FY20?
No, I think that's too. It's a small volume. It's not in absolute terms, no, not a small, great volume. We are about 1,000 tons, thereabout 1,500 each.
Okay, sir. Okay. Thank you, sir. That's all from my side.
Thank you. The next question is from the line of Sunil Kotari from Unique Asset Management. Please go ahead.
Thank you, sir, for opportunity and really great job you are doing on cost measures. Sir, my first question is to Mr. Dev. During last 5 to 7 years, what we have tried and done is we backward integrated with some intermediates we were previously may not be doing, and we have added some products we added. So now onwards, what we are doing is we are adding some specialized products, accelerators and all. So any major area over which you will be working for next 3-5 years where we are lacking, or maybe we want to add some product basket or some opportunity on which you would be working on strategically, sir?
Yeah. Okay. First and foremost thing, I think you have understood it rightly that as a rubber chemicals business, we always decided that we will not depend on buying intermediates, because buying intermediates is something where you are actually buying your own raw material from your own competitor. Because once the intermediate is manufactured, the intermediate manufacturer has always a capability to manufacture finished product. And that's the philosophy on which we have been always working. And that's what exactly we have done. For antioxidant and accelerator, we are 100% on our own, and we will never buy intermediates. We will manufacture intermediates and then we will convert it into finished. So that philosophy continues. As far as the future is concerned, I think I mentioned 5 minutes back, as an organization, our first goal is to consolidate the capex which we have invested. That means look at additional volumes, look at how best we can fill the capacities at the earliest. Simultaneously, yes, the work continues to happen in terms of business strategies, products, new products. But as I said, I think this is too premature to talk. And at the right time, when we have the right plans, we will definitely share it with you.
Great, sir. And sir, my last question is to Srini. Sir, during just ballpark or some indicative feed on the pricing trend during last say 1 or 2 years per ton realization, because we are adding some qualitatively better product or maybe some specialized product. So overall, how is the pricing trend? Because raw materials are moving, so we are maintaining very good gross margin and value addition. But the overall price trend of our products, just any indicative understanding?
Just to give a flair of it, one of our Chinese competitor has given an announcement the prices have decreased by 24% or 22%. Whereas we have said from the peak levels we have lost 15%.
Right.
That's the peak of the price effect, because when we never touch the peak level of pricing when the Chinese went whole hog consequent to the scarcity of product on account of pollution control. We never touched that peak. So therefore we have reduced -15, whereas they have reduced -24 from the peak level.
Oh, great. And now we are seeing stability in the pricing.
At least this quarter we witnessed stable prices. So when we have to look at every quarter, it's a battlefield every quarter with our marketing chief encounters. So obviously he will try his best, or he and his team will try his best for the best realization, but you have to understand how the competition is working.
Correct. Great, sir. Thanks a lot and wish you good luck.
Thank you.
Thank you. Next question is from the line of Shri Hari from PCA Securities. Please go ahead.
Yeah, thanks for the opportunity. Actually, on the Dahej facility, so please explain the OpEx differential between this facility and your Mumbai facility. And in terms of capacity, what is the share currently, and what will it be once the entire CapEx is done? And secondly, if you could talk a little about the product pipeline, new product pipeline. Thank you.
I think if I understood the question correctly, you are asking about the capacity better. Our manufacturing facilities presently, before the expansion, was 43,000 at Navi Mumbai and 12,000 at Dahej. Post expansion of this 450 crores, it will be 50% each. As far as the capacity is concerned. The second question on new product, I think Mr. Dev was already briefed the previous gentleman who had raised this question. You already answered it. There are some work is going on, but this is not an appropriate time to announce it. As and when some substantial progress is there, we will definitely announce it. I didn't understand your OpEx, the third question, the OpEx question. What was that question?
Yeah. Since the Dahej facility is fully automated, I wanted to understand how is the operating expenditure different, and to what extent is it lesser compared to your Mumbai facility?
I think in terms of OpEx, what happens is the maintenance per se, the old plant in Navi Mumbai is much more older and the new plant in Dahej is new. So obviously the maintenance will undergo a change. Similarly, the overheads of labor, etc. in Dahej will be relatively lower as compared to depreciation in Navi Mumbai. However, the new Dahej will have the new plant depreciation, the entire say 400 crores or 600 crores capex addition depreciation will come in Dahej as compared to Navi Mumbai. These are the distinct analysis features or business variations. I don't think so. We can share anything beyond this.
Okay. Thank you.
Thank you. The next question is from the line of Chirag Patel, an individual investor. Please go ahead. Mr. Patel, your line is in talk mode. Kindly go ahead with the question. As there is no reply from the current participant, we move to the next question from the line of Rohit Nagraj from Sunidhi Securities. Please go ahead.
Yeah, thanks for the follow-up. Just one clarification. So in the opening remarks, Mr. Dev mentioned that the global customers have classified NOCIL from regional to global supplier. So anything which has commenced, a process that has commenced post this, or any validation process which has started in the last quarter or 2-3 months?
Rohit, as I mentioned, these are the statements or the strategic statements made by the customer. So, of course, the strategic statement does not get converted into business. But the positive thing which has happened is they have started sampling our product. Now, between the sampling and the actual business, the gestation period could be anywhere between 9 months to 12 months. It is this statement was made just to give you a strategic indication how the business is moving. But it will take maybe any time between 9 to 12 months to get converted into actual business.
All right, sir. Thanks for the explanation. Thank you so much.
Thank you. The next question is from the line of Chirag Patel, an individual investor. Please go ahead.
Hello, sir. Good morning. I have one question. With respect to the anti-China sentiment, which is gaining momentum post this pandemic, so how are we looking ourselves to get the market share in our respective products and particular to the chemical sector?
I think, yes, I agree with you that there is anti-China sentiment. And if you really look at it, outside China, NOCIL is one of the largest rubber chemicals manufacturer with a basket of 22 products. So, looks positive. Could be an opportunity. But these are all qualitative statements which I am making, because at the end of the day, how long these sentiments continue, whether these sentiments continue into a business or maybe after a year it dies down. These are the questions for which I have no answers. But if you really ask me, I think if it continues, NOCIL has a much better prospects in terms of rubber chemicals business.
Okay. So in our capex plan and future estimate in terms of volume and turnover expectation internally, did we incorporated this sentiment, or even though the sentiment will not get as per expectation, we couldn't have any change in our guidance?
No, in fact, I think as we have been saying that we have adequate volumes, okay, and if this sentiments get converted into volumes, we can look at it very differently. If there is an immediate need for volumes, I think the volumes are available with us practically for all the major products like accelerator and antioxidants. So as we walk along, we will have to observe how these sentiments get converted into actual actions and business. Okay. No worry in terms of volumes. I think volumes will be able to supply if it gets into action.
Okay. Thank you.
Thank you. The next question is from the line of Praveen Kumar from Acuitas Capital. Please go ahead.
Hello, sir. Thanks for the opportunity. I had one question on the incremental capacity plans of the Chinese competitors apart from China Sunshine, the players like Kemai Chemicals and Shandong Geotile. I just wanted to understand, do you have any sense of whether they are progressing with those plans, or do you think they are on hold in your view?
If you can look at the press release of China Sunshine or investor call, probably there is a reference to that. I think in that reference, they are saying one of the competitors had IPO plans, it has failed. And the second competitor is operating below 50%. That is the news we got from China Sunshine's press release. To get information in China is a big challenge, but this is what we could get the information from the conference call. So maybe you can have a look at that.
Okay, sir. Thank you.
Thank you. The next question is from the line of Chirag Tikriwal, an individual investor. Please go ahead.
Hello.
Yeah.
Good afternoon.
Good afternoon.
Sir, my question is, what was the estimated demand-supply ratio pre-COVID worldwide? And what do you expect demand-supply ratio to be 3 years from now worldwide? From your previous presentation, it was inferred that 40,000 ton demand increases every year.
Yeah. I think that this year will be an aberration. 2020 will be an aberration. We are not denying it.
No, I'm not asking for 2020. Post-COVID, I'm not asking. I'm asking pre-COVID, what was the estimated demand supply ratio?
We were always looking at 3 to 4%.
3 to 4%. And what was the demand supply ratio? I mean, was it at 90% capacity worldwide, 95, 100? What was that?
I think in 2018, the market became supply short and demand excess. In 2019, because of the slowdown in the automobile sector, there was no new additions to the capacities, but the supply became excess, demand became short, demand static. So I think what is more important is once the economic conditions improve, we can expect supply to be shorter. I mean, is what we understand, but it's too early to talk about it. But this is what the outlook is, because as of today, only 2 players have announced expansion plans, or 3. NOCIL worldwide little bit, NOCIL and China Sunshine. Others we are not aware of how much they are expanding. So any corrections in demand, any improvement in the economic activity will create a problem. And otherwise, there should not be any rationale for any investment by China Sunshine in this to announce for such big investments in the last 6 months.
Okay. My second question would be, what would be the capex outflow for the next 3-4 years? Only the maintenance capex for NOCIL. I'm assuming there would not be any growth capex in the foreseeable future.
I think Mr. Dev already answered. We are working on something. As and when an appropriate time, he will announce it. He will announce it. That's one part. Maintenance capex is not more than 10 crores a year.
Oh, thank you.
Thank you. The next question is from the line of Abhishek Datta from Prabhudas Lilladher. Please go ahead.
Hello, sir. So when you say that your Q2 volumes will be higher than last year numbers, so what kind of price drop which we have seen from on a YOY basis on a Q2 to Q2 basis?
I don't have that number right now, Abhishek. But on the whole, we have said in 1920 the price dropped by 15%. The broad number we can give. But if you are looking at sequential quarter, that is Q1, Q2, there could be marginal corrections here and there, but nothing great.
Okay. And so this Q1 revenue drop of 50% on a sequential basis, there is no price correction. It's only volume correction which we are seeing.
It was mainly volume corrections. There were few price corrections, but it was not material to be talked about.
Okay. And lastly, sir, any timeline when this anti-dumping duty, whatever notification is likely to come out, any timeline on that, sir?
I think that we have already announced. That is about maximum time is 12 months. We are in touch with the government authorities. Let's see.
Okay. Thank you.
Thank you. The next question is from the line of Pawan Kumar from Ratnatraya Capital. Please go ahead.
Sir, what would be the demand, the breakup in terms of volumes, exports versus domestic in Q1?
Q1 actual sales better?
Yeah. Actual sales, what would be the proportion of exports and domestic?
In Q1, I think we had 50-50 sales volumes split up, domestic and exports.
Okay. And what was the capex we executed in Q1, and how much of capex is pending until Q3?
I think we have the entire 150 crores yet to be capitalized by October. I think somewhere in October we are going to capitalize.
Okay. So it is already done.
No, October 20 it will be capitalized, and we said there will be a quarterly incremental depreciation of 2 crores per quarter. We won't ask something like that.
Okay. Fine. And what would be the cash on the balance sheet right now, sir?
Which period?
Excuse me?
Which period cash balance?
Yeah, as on June.
I think that's not appropriate to share right now. We will share the cash balance of September. We already shared as of March. I think what's not required we will not share, please.
That's fine, sir. Thanks.
Thank you.
Thank you. As there are no further questions, I now hand the conference over to Mr. S.R. Dev for closing comments.
Thanks a lot. I take this opportunity to thank everyone for joining the call. I hope we have been able to address all your queries. For any further information, kindly get in touch with our CFO or Strategic Growth Advisor, our Investor Relations Advisor. Request all of you to be safe under the given circumstances. Do take care of near and dear. Thank you once again.
Best wishes to all of you.